G'day everyone, welcome back to Pete's Investing. This is June 23rd, 2023. This is the Euro US dollar currency update. On our weekly and daily, we're in a bullish momentum, whereas on the hourly, we're broken out into a bearish, but as well, importantly, we've got this bearish divergence working out at the moment, and it looks like it's just about to break out to a potential entry into that. So first looking at the weekly, the triple moving average of the weekly chart, the CCI 150 moving averages, and the oscillator we've included are both in an uptrend, are all in an uptrend, giving us this bullish momentum. So again, I prefer to trade the hourly on the weekly and daily trends when they're combined. So bullish on the weekly, bullish on the daily. Again, on the daily, we did have a bearish divergence, and that's actually not still in play actually. So the way you would read that is you would draw a channel between that range there, bring back to the lowest candle within that divergence range, and then set a Fibonacci target in the first target range, which would be between that low and that high. So if I was to place a target on this bigger range, I'd do it in the first Fibonacci range, which would be between that 38% down to that 50% range, and that's the larger time frame target area if this was to break below that little channel. That's on the daily, of course. Now on the hourly, we've got a different divergence playing out. Again, this is independent from the daily. We've got a bearish divergence on the CCI versus a bullish divergence on the price chart. We did have a smaller divergence here previously our previous video, and you can see there that actually executed when it fell below that little channel and it hit this Fibonacci range, so that target was hit. Price went sideways and actually came back into that target area. Now what it's doing now, it's actually formed this second bearish divergence, and the way you would play this would be to place a channel down to the lowest candle in that range. You can see there it's just about to break outside of this little channel there, and then you'll place a Fibonacci target area. So let's zoom out and go back to this area, this recent Fibonacci low to that Fibonacci high. So again, if it breaks below this channel in the coming hours, you would set a target into the next Fibonacci range between that area, between a 38% and a 50% Fibonacci range. So that's our initial target area should it break below that. Now, having said that, that coincides with the bearish outlook on our indicator as well. So we may see a bit of a downtrend in the coming days, possibly, if this continues and breaks much lower than that. If it breaks much lower than the 61% on the hourly, then we're going to possibly see a break to the downside as well on the daily oscillator down here. So again, trading between the weekly, daily, and hourly timeframes is when all those indicators line up. And that's what this back testing demonstrates, that this short back testing and this long back testing back here. We only trade in the direction of the weekly and daily. What I'm demonstrating in terms of the, for those new to the channel, is some divergence. And I generally use these divergence if I'm going long. I would probably take profits and get out of it, especially at this point now. It's about to break to the downside. If I was going long here, I'd be taking profits and getting out of the trade. That's where I use divergence primarily. You can trade it, and as I said, 80% of the time these work. So they occasionally fail, but looks like this is about to enter in an entry strategy, and then that'll be the target area. So to understand how to work this and other trading strategies, subscribe to my Patreon page, where we also scan for weekly stocks, currencies, and commodities. Subscribe, like, and share the channel. Thanks for watching, and see you in a future video.